Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Today, my guest is Greg Dickerson. Greg is a serial entrepreneur, real estate developer, coach, and mentor. Over the past 23 years, he's bought, developed, and sold over $250 million in real estate, built and renovated hundreds of custom homes and commercial buildings, and started 12 different companies from the ground up. Greg is an expert on the topics of entrepreneurism, real estate development, and all aspects of real estate investment. He has spoken at industry conferences and mastermind events around the country and is regularly interviewed on the Top Business and Real Estate Investing podcast today. Hey, Greg, I'm grateful to have you here today. Tell me more about your background and how you got started.
Hey, John, it's great to be here. I started in 1997 as a small remodeling contractor, handyman, and just doing what I could, just me, my truck, and my tools. And I built that into a $30 million company in 7 years. You got into new construction and development and investing and things like that. And then I started 12 other companies along the way. So it was about a 7-year period that I had that exponential growth and learned how to do a lot of other things. I was very fortunate, had a lot of great mentors in my life and educated myself, poured into myself. And I started, from the ground up with nothing, from nothing. I didn't go to college. I went in the Navy right out of high school, and I learned it all the hard way through self-education and working with smart people, other investors and developers.
At what point were you introduced in your business to start working with passive investors?
So it was early on. I was in a resort community where the properties were summer vacation homes. So pretty much everything down there were passive investments. So they're vacation homes that people would buy and they would rent them out, and it was totally turnkey. There were property management companies that managed every aspect of the property. So the investor literally came in and they either, built the house through somebody like me as a partner or as an investor. And then they'd get the financing, and everything else was just turnkey autopilot. So that was a really great passive investment strategy, and it still is. I mean, those things are like little multifamily buildings. Some of them throw off $100,000 to $300,000 a year in cash flow for a single family beach house.
That's awesome.
Yeah.
So how are you finding these opportunities, and how are you actually connecting the passive investors? And basically, how are they coming to you knowing that you're the guy to find for these opportunities?
Yeah, so I established myself in the community and I knew the area. So that was my market. I knew it inside and out. I was a builder. So I would build homes for people. You'd come down, buy a lot, and you'd hire me to build you a house. And I was working for other developers and investors that were building and renovating properties. So what I started doing is, and what I teach is, to build a business that generates cash flow to invest in other assets. So I took all my profits from my building company and my other companies, and I started buying land, developing land, and then I would either sell those lots to an investor and then build the house for them, or I would partner with investors where they would come in, they would put up all the money, I would do everything else. So I became known as the high-end oceanfront guy. So if you wanted oceanfront land, I was probably going to know where to get it, or I already had it under control. So I would tear down buildings and redevelop and things like that. So I would do as much as I could do on my own with my own cash. And then when I was maxed out, at the time, when I was just getting started early in my career, I could probably borrow about $10 million at any given time. And I had a good net worth and good liquidity in my companies. But, that was a limit from the local banks of what I could use or have out at any given time. So I would max that out pretty quick on my oceanfront properties. So then I started taking on investors that would come in, and I would do everything. So I would get the land, I would build the house, I would get it in a rental program, I would do everything. So literally all they had to do was just put the cash in, and everything else was done and delivered for them.
That's pretty cool. And
Yeah.
I know pretty much what you do now, where you like to keep your cash liquid so you can take down opportunities quicker and faster to be able to move on and put these investors into these type of opportunities. I think that's pretty cool. Why did you pick that strategy to keep your cash liquid?
It's just, as a developer, it is what it is, right? So that's just the business I came up in. It's the strategy that I learned. And what you do as a developer, we're very opportunistic, whether it's a business or if it's a real estate asset. I'm also an equity capital investor in companies. The idea is you go in with cash. That's where you get your best deals. You create the value, then you exit. So what I do is I compound cash. Instead of compounding cash flow and equity, I compound cash and I pull that equity out. Now I did do the refinance thing and I kept a few properties here and there, but I know myself and I don't like to own properties long-term. I don't like to manage them and deal with them. Even with property managers handling it, I'd rather have my cash so that I can take advantage of opportunities in any given market cycle. And that's what saved me in 2009 when the world was coming to an end and the economy was collapsing and real estate collapsed. What saved me was I had businesses that generated cash flow in addition to my building company. My building company got put out of business, but I had cash and I did have properties that at the time that did have cash flow, and I was able to exchange those and pull the equity out to survive everything. So it was an interesting time, but cash was where you wanted to be in 2009 when it was all going down because you could swoop in and take advantage of the opportunities.
Absolutely, absolutely. So we can't project this or tell down the line. The incumbent, what's it called? The recession that everybody has projected coming down the line.
Yeah.
What would be a great strategy for a typical passive investor since you've already been through the process?
Yeah. So for passive investors, you want to look at number one, what is Wall Street looking at? What are the REITs investing in? Because they're very safe right now. They're very cautious and they have inside information that the general public doesn't have. So I would look at what they're investing in, and they're investing in the safest asset classes, even at very low cap rates, because they're looking at it as a bond, as a mutual fund, as an annuity. So class A and B apartments that are stabilized, self-storage in good markets that are occupied, that are fully performing and functional, and mobile home parks. A lot of REITs are moving into mobile home parks in good areas. Now, I'm not talking about the trailer park with the dirt road where everything's falling apart and you got to have the cops out there, and do the drug inspections and things like that. I'm talking about nice paved roads where people live and they're good quality, affordable workforce housing. So those are, in any economic event, people need somewhere to live. And if people are losing their homes, they have to move into rentals, whether that's townhouses, apartments, or even single family homes. There are a lot of big developers out there, like the national home builders that do, there's home builders that do 100,000 houses a year, right? That are now building subdivisions for rent, not for sale. So there's a big movement out there to the renter generation. And I did a video on it the other day. Financially, it makes way more sense in today's world to rent versus own if you're paying market value. Now, if you get in and you buy something under market value and you improve it and you build equity, obviously you can make money that way. But if you're paying market value, you're buying a new house and you don't have the ability to pay cash, you have to finance, makes way more sense financially to rent than it does own over a 30-year period. And I did a video on it, and you'll come out with about $800,000 at the end of a 30-year period if you take the money you would have spent just on taxes, insurance, maintenance alone, and passively invest that into another, like a syndication or even mutual funds or something that gives you about a 5% return. Even at a 5% return, $10,000 a year over 30 years will leave you with $800,000 in the bank after you factor in what the cost of owning a house was. If you finance this is a $250,000 house. If you finance a house over 30 years and you pay, 4.5% interest on a 30-year mortgage, you're actually in the whole $250,000 at the end of the year. That's all you will have left over when you trade that house out. So it's pretty interesting to think about it like that.
Awesome. So I know you referenced the video that you did, and I just want to tell people, Greg has his own podcast, the Greg Dickerson Show. Please subscribe, listen to it. It's awesome. It's phenomenal. And it's really convenient for the passive investor because you like myself on this show, we're very time focused. So right. You have podcasts that are 3 minutes long and podcasts that are probably 10, 15 minutes long. And that's kind of the sweet spot for this one. The reason why is passive investors, they're busy professionals. They don't want to be inundated with 40-minute podcasts. They want to be in and out, get the value, and get the information. So building upon that, what's the one piece of advice you would give to passive investors?
So for passive investors, I would say double down on whatever you're doing to earn your income and invest as much as that as you can into other passive investments that generate that generational income so that you can do whatever you want to do. So whatever you're doing, if you're a professional, if you're in an office environment, you're a doctor, lawyer, dentist, whatever it is, and your time is limited and you're producing based on your time, You've got to find ways to leverage your time, partner up with other professionals, build and grow your practice so you can bring in more income so that you can invest in these passive income assets. And I would scale back your lifestyle. Don't buy the car, the big house, and the country club membership. If you take that country club membership, $600 to $1,000 a month, and you put that into a passive investment, that's going to retire you in 10 years. And a lot of people just don't understand that. I just told you $10,000 a year can be worth 800 grand over 30 years, right? At 5%. Most of these passive investments that we're talking about, syndications, are going to get you 10 to 20%, IRR and annual returns. So take those extra expenses and those luxuries, put that into a passive investment vehicle, and double down on whatever it is you're doing to bring in more money to invest in these assets. The more you add, the more you do, the quicker you can get to that lifestyle that you want to get to. And if you're a dentist, get out of the mouth. If you're a doctor, get out of the office. If you're a lawyer, get out of that chair. Whatever it is, that's the way to do it.
Absolutely. Even a bad passive invested deal in an apartment syndication, 8%? It's still throwing off 8%. You're still recouping a lot.
Exactly. And, versus equities or, gold or anything like that, an apartment building is not going away. Okay, let's say the value becomes zero for that building. We have some economic collapse and real estate's worth nothing. Not going to happen, but let's say it does. You've still got something that people need. If we were in a barter society, a barter economy, and money no longer matters, you've got housing. You can trade that, right? So you're going to be safe in that asset. Stock can evaporate overnight. Stock is liquid, so that's an advantage, but it can go away overnight. Gold is speculative. Oil is speculative. They're commodities, and they're only as good as the market that's ability to buy it, right? And they're scarce. So when the world changes and things change, people need four things, right? They need to live. They got to have somewhere to live. They need to eat. They got to put fuel in their vehicles, and they need medical care and core services, right? They need education too, but that's not a moneymaker necessarily. It's hard to own educational assets. But those other four core services, if you look at owning those assets, investing in those assets, you're going to be safe against any economic cycle.
Greg, that's friggin' awesome, man. The value just provided, I don't even know where to begin to just dissect everything you just brought to the table. So how could we reach you, Greg?
So gregdickerson.com is my website. My podcast is on there. I also have a YouTube channel. I do keep everything short and little digestible bite-sized pieces. Some of it's professional, some of it's tactical, some of it's mindset, some of it's inspirational. So I touch on a little bit of everything from businesses, buying businesses, growing businesses, investing passively, scaling and growing your income and your businesses so you can invest in assets. So it's gregdickerson.com, and everything's on there. And I look forward to helping you any way I can.
I appreciate you. I'm just going to include your website on the show notes so everybody knows to go there. And is there anything else that you want to share with the masses?
So I would say start right now. So life goes by quick. I'm 52 now, and I've reached a point in my life where I'm trying to give back and help as many people as I can, because my life was over before I know it. And I was working hard to build businesses and do all these things. But looking back, if I would have doubled and tripled down on a few things that I was doing, I could have been a billionaire right now instead of where I'm at. And so, I want to help as many people as I can realize time is valuable. Time is limited. And if you go to work every day and do the same thing you've been doing every day, it's going to go by so fast, and you're going to be looking back going, man, if I'd only done this. So whatever it is, wherever you are, start right now. Start taking action right now. Take a look at your daily behaviors. Make sure they are moving you towards your goal. Every little thing you do should be moving you towards that goal.
I appreciate you. I agree with you. Time is our biggest currency, and we can't get that back. We can only buy it by passive investments, creating streams of income to buy back some time to get some sort of our life back, right?
Yeah, absolutely.
I appreciate you. Greg, thank you for coming on. PI listeners, I appreciate you for listening. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Until next time.